Hello, and welcome to another update video about Solana. Solana broke out to the upside today, a little bit out of a small triangle pattern there. But is it really a sustained break or not? We're going to take a look at that now in this video. Let's take a look at the 4-hour chart first. Here, the idea is still that a wave 1 likely topped in July. It's a long time has passed. A lot of time has passed. Since then, time is running. Wave 2 pullback bottomed in September, feels like yesterday. And then this long third wave to the upside peaked in December. Yeah, end of December. And then this fourth wave, well, it might be unfolding right now. That's the base case, is that this wave 4 should happen at some point, and then we should still get a wave 5. It is not clear if this fourth wave is already unfolding. It's just not clear. The market hasn't revealed that yet. It's possible, it's one of the likely options. It would be the short-term bearish scenario that this wave 4 is already unfolding. In a short-term bullish interpretation, the third wave is still unfolding. So the fourth wave could already be unfolding, okay? That short-term bearish, short-term bullish is the third, which I've got here as a potential top end of December, but it could still be unfolding in the white scenario. We're going to take a look at that now. But in both scenarios, ideally, we get a more pronounced, a more clearly defined fourth wave. Is this already wave 4? Probably not. Typically, and we've seen it most recently again on the link chart, the wave 2 and the wave 4 have a similar length. I mean, at the moment, the wave 4 only, if it is wave 4, only roughly has reached the maybe 40% of the length of wave 2. It's normally not enough for a very clear wave 4. I mean, it's not invalid, right? But I assume if this is wave 4, it should stretch out a little bit longer. And if it goes up from here, I would count it still as part of wave 3. Let's go to the 1-hour chart. So that already made very clear what the short-term bullish and short-term bearish scenario is. Let's explore if we can see any further clues here. I'm afraid probably not, but we might have to adjust the wave count here, the micro count. Let's just again remind ourselves of the short-term bullish scenario, which would be, okay, third wave still unfolding, targeting $135 plus. And we would need to see, first of all, as a condition, that the 85.50 level, that's the last swing low here that did hold, or that did form on the 8th of January, 85.50, that needs to hold. We then need to see a break above the $108.60 level. This is the A wave high in the yellow count, because it would invalidate the bearish triangle. And we need to then see it get above $116.40. That's the key resistance level, Fibonacci resistance, but also structural resistance. Yeah, then we can look forward to getting to $135, maybe even $147 in the third wave. How would the micro count look like? Well, it would be most likely a W, X, Y structure, and the X wave might be a triangle. So if the wave W topped here on the 4th of January, then it's possible that this is a triangle A, B, C, D. And this could have been the E. Okay, I talked about that earlier today in the video. But then this would now need to be the breakout. Now it doesn't look like a breakout. Okay, so triangles, when they break, they should really move in very aggressive waves. So the idea is wave D might still be unfolding, and then we could get an E wave maybe tomorrow or so. So that's just one idea, right? I mean, it's just an idea for a triangle. It is valid. Lower highs, higher lows. But the triangle obviously needs to break and give us some, some confirmation. And also when a triangle breaks, it's typically very fast. So if this is the right count in white, we should see a lower high form in the E wave, maybe in the next 1 or 2 days. In the yellow count, we also have a triangle, but we should break down and need to break below 85.50 to confirm it. And at the moment, this triangle would be valid as long as the price stays below $108.60. And the triangle count would be A, B, it's a running triangle, C, D. Well, and the E wave could still be in the making. Again, also here, we haven't finished an E wave yet. So as you can see, it can easily break out in both directions. And that makes sense because it's a triangle. It moves sideways. It represents a balance of forces. The market hasn't confirmed which direction, but the analysis should give you very clear levels to watch that you might want to act on when they're broken, or I don't know how you trade this, but there are different ways, of course, if you want to trade this. Yeah, for anybody who's looking for a cheaper entry, I mean, this would be ideal, right? This C wave down in wave 4, possibly targeting 59.40 first. That would be a key. That's a key resistance area or level. The 38.2 retracement is typically a key target for a fourth wave. So yeah, we have to remain a little bit patient. I know it is frustrating, but that's often what wave 4s are. And yeah, I'll still keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.